So, Zions Bancorp just dropped their Q3 earnings for 2025, and man, it is a story of two halves. On one hand, the core of the bank looks stronger than ever, but on the other, they hit a massive, unexpected speed bump. Let's dig in and figure out what's really going on.
All right, before we dive in, let's get the important stuff out of the way. Just a quick reminder that this is for informational purposes only. It is absolutely not investment advice. Okay, let's get to it. And here's the big puzzle that has everyone talking this quarter. Zion's overall profits actually went up to $221 million. So why is everybody focused on this one single, massive loss? Why did it send a shockwave not just through Zion's, but across the entire regional banking sector? That's what we're here to unpack. To really get what's going on, we have to start with the good news. And trust me, there's a lot of it. If you look underneath that one headline-grabbing number, the bank's fundamental business actually looks incredibly healthy.
First up, an 8% jump year over year in what's called net interest income. Now, this is basically the bread and butter for any bank, right? It's the difference between what they earn on loans and what they pay out for deposits. Seeing that number climb to $672 million is a really, really good sign.
And check this out, an 18% surge in adjusted pre-provision net revenue. That's a mouthful, I know, but just think of it as the bank's core profit from its everyday operations before it has to account for any loans that might go bad. An 18% jump tells you the engine of the business is running hotter than ever. And here's how you know they're getting smarter about making that money. We're looking at the efficiency ratio. And for this number, you want to see it go down, down, down. It tells you how much it costs them to make a dollar. Dropping from over 62% last year to under 60, that's a huge operational win. So when you put it all together, the picture looks pretty incredible, doesn't it? Earnings per share are up. The profit margin they're making on loans is wider. People are trusting them with more money because customer deposits grew. And their capital cushion, the thing that protects them from financial shocks, it actually got even stronger. By almost every important measure, this was a stellar quarter. But for all that good news, one single line item in their report completely hijacked the conversation and grabbed all the headlines. And this is where things take a sharp turn. $50 million. Let that sink in for a second. That was the size of a single loan charge-off the bank had to swallow this quarter. It was a huge number that came out of absolutely nowhere. Now, just so we're all on the same page, when a bank charges off a loan, it's basically throwing its hands up and saying, yeah, we're probably never getting this money back, so they take the loss right away. Banks always expect some loans to go south, but a single loss of this size, that's what set off all the alarm bells. So what exactly went down? Well, this massive loss came from two linked commercial loans out of their California division, and the reason they gave? Apparent irregularities and misrepresentations. Now, that's some serious corporate speak, but it basically screams, we think there was fraud involved. On top of that, they had to set aside another $10 million just in case, bringing the total gut punch to $60 million. Of course, the CEO, Harris Simmons, had to address this head-on. He basically framed it as this one single black mark on an otherwise stellar report card. He pointed out that if you just, take out this one massive event, all their other loan losses for the quarter were just $6 million, which honestly is peanuts. So, this is the $50 million question, right? Was this a sign of some deeper rot in their loan book, or was it just a really, really bad day at the office? To figure that out, we've got to zoom out a bit and look at the bigger picture. And this chart right here just says it all. Look at this. For the last year, Zion's loan losses were basically flatlining, near zero, which is exactly what you want to see. And then, bam, this quarter, that one loss sends the rate through the roof, a more than five-fold spike. It completely shatters their amazing track record of pristine credit quality. Now, the bank's top brass are really trying to control the narrative here. Their chief credit officer, Derek Stewart, came out and said it plain and simple. They believe this was a one-off, isolated incident and not a sign of a bigger problem. And to be fair, they've got the history to back that up. For years, Zions has been one of the best in the business when it comes to credit quality. Their loan losses have consistently been among the lowest of all their rivals. And that context is so important because it really highlights what a complete anomaly this quarter really was.
Okay, so this brings us to the final showdown. How do you make sense of a quarter that's pulling you in two completely different directions? Well, it really comes down to two camps: the bulls, who are optimistic, and the bears, who are, let's say, a little more skeptical.
The bull case, the optimistic view, is pretty simple. They're saying, hey, look past this one ugly number. The core engine of the bank is humming along with that 18% profit growth. Management has a great reputation, and they're swearing up and down this was an isolated event. But then you've got the bear case, and the bears are saying, whoa, not so fast. You can't just brush a surprise $50 million loss under the rug. It makes you wonder, did their safety checks fail? And maybe more importantly, with the economy looking a little shaky, could this be the first sign of trouble, not just for Zions, but for other banks too?
And that's really what it all boils down to. This one essential question: was this a genuine crack in an otherwise solid foundation, a sign of weakness we should all be worried about? Or is taking a massive, painful hit like this every once in a while just the price of admission for being in the banking business? How you answer that is going to define the story for Zions in the quarters to come.